Now, preference shares may be redeemed by a fresh issue of shares, which we did, capitalization of free reserves, which we have done, or it could be a combination. So it is possible that if I have 10 lakh preference shares, 10 lakh rupees worth of preference shares to be redeemed, it could be that 6 lakhs is from fresh issue and 4 lakhs is from free reserves. This is possible. So it is either out of fresh issue or capitalization of free reserves or a combination of both. Please also note that when we find out the number of shares, we cannot have fractional shares. So it is always rounded off to the next whole number. We will not be issuing fractional shares. Sometimes they do say that the number of shares are to be rounded off to multiples of 25 or 50 or 100, then we do accordingly. But higher number of shares would be issued. Let us take another example. A company decides to issue minimum number of equity shares of rupees 10 each at 10% discount to redeem 7 lakh preference shares. So face value of preference shares to be redeemed is 7 lakh. And the proceeds of fresh issue, it's actually an equity share of 10 each being issued at a discount of 10%. The maximum amount of divisible profits which are available for redemption is 2,50,000. Calculate the minimum number of shares to be issued by the company and pass journal entries. So how do we find this out? What is the face value of preference shares to be redeemed? It is 7 lakh. That is 7 lakh. Face value of preference shares to be redeemed. What is the amount which we can transfer to the capital redemption reserve? Less. Amount available, profits available to be transferred to capital redemption reserve is 2,50,000. So what is the balance left now? Balance left is 4,50,000. What is 4,50,000? 4,50,000 is the face value of the preference shares to be redeemed by the issue of equity shares. So what is proceeds of fresh issue? So 45 lakh is what? Is the face value to be redeemed by fresh issue. How do we find that? What is fresh proceeds of fresh issue? It is rupees 10. Proceeds of fresh issue is either 10 or 9, whichever is lower face value. When it is at a discount, we take the amount of rupees 9. So number of shares, the minimum number of equity shares to be issued is 4,50,000 face value of preference share to be redeemed by 9, giving us 50,000 shares. 50,000 shares. The minimum number of shares to be issued by the company would be 50,000. What would be the accounting entries in such a case? For fresh issue, bank account debit, we get 50,000 shares into 9, that is 4,50,000. Discount account debit, 50,000. To equity share capital, this is 5 lakh. This is our first entry on fresh issue. This is 50,000 shares, 50,000 shares into 9, 50,000 shares into 1 and 50,000 shares into 10. Next, for redemption, what are the entries for redemption? For redemption, I would say preference share capital account debit there is no premium. So to preference shareholders to bank an amount of rupees 7 lakh. Now for transfer of free reserves to capital redemption reserve, they've not specified exactly what is available. They have said divisible profits available. Divisible profits are again available for distribution as dividend. So the entry for that would be, that is, assume it is lying in general reserve account debit to capital redemption reserve account. How much is the amount? They said it was 2,50,000 being transferred. So it is 2,50,000 transferred. Therefore, 7 lakh preference share capital is replaced by 2,50,000 capital redemption reserve, 2,50,000 and equity share capital of 5 lakh. Of course, this is a little more of 7,50,000 because 50,000 is actually discount which would not be available, funds which are not received, and therefore 7 lakh is the preference share capital which was redeemed. So the preference share capital of 7 lakh which has gone out has been replaced by capital redemption reserve of 2,50,000 and equity share capital of 5 lakh. Let us consider another example. The board of directors of a company decide to issue minimum number of equity shares of rupees 10 each. They have said minimum number of equity shares of rupees 10 each at 10% discount in order to redeem rupees 10 lakh worth of preference shares. The maximum amount of divisible profits which are available is 7 lakh. Calculate the minimum number of shares to be issued by the company. Also determine the number of shares if the company decides to issue shares in multiples of 50 only. So let us see what is the face value of preference share capital to be redeemed. That is 10 lakhs. Next, what information is given to us? The maximum amount of divisible profits available for redemption is given is 7 lakh. So the amount transferred to capital redemption reserve would be 7 lakh. Therefore, what is 3 lakh? 3 lakh should be the proceeds of fresh issue. Proceeds of fresh issue. This is actually 3 lakh is the face value of the preference share capital which should be redeemed by proceeds of fresh issue. Now, what is the proceeds of fresh issue? What are we issuing? Equity shares of rupees 10 each at a discount of 10%. So, it's either rupees 10 or rupees 9, whichever is lower. So, we will take rupees 9 to find out the number of shares. Preference shares to be redeemed is now 3 lakh, balance left. Divide by 9, we get 33,333.33 shares. So what is the minimum number of shares to be issued? We will not issue fractional shares. Therefore, we will have 33,334 shares. If, however, they say that determine the number of shares, if the company decides to issue shares in multiples of 50 only, then we take the number of shares to 3,350 shares. The next 50, these many shares would be issued. So please note, we will not issue fractional number of shares. We will take it to the next highest number or next highest multiple, whatever is required. Another example, where an extract of a balance sheet has been given to us. Equity share capital is 6 lakh. Preference share capital is 3 lakh. Then you have reserves, general reserve, profit and loss account. Both are free reserves. Debentures are 2 lakh, creditors are 50,000, bank overdraft 25,000. Then we have certain assets. Now, what does the question say? It says that the 12% preference shares are redeemable at a premium of 10%. So 3 lakh. This is going to be redeemed for 3,30,000. The company wants to maintain the cash balance at 25,000. We already have cash of 50,000. For the purpose of redemption of preference shares, it is proposed to sell the investments for rupees 2 lakhs. Therefore, investments, the book value is 2,25,000. This is going to be sold for 2 lakh. So there will be a loss of 25,000. The company proposes to issue sufficient number of equity shares. So we need to compute the number of equity shares of rupees 100 each at a premium of 5% to raise required cash resources. So here we are not talking about the capital structure, we are talking about the cash resources. But we should ensure that the provisions of the Companies Act are adhered to. So let us see what is the amount of cash required for redemption. Cash required for redemption is 3 lakh preference share capital plus 30,000. So we need 3,30,000. What is available to us? Cash, there is already a balance of 50,000. Since we need to retain 25,000, let us assume that cash balance is available is only 25,000. Next, we sell investments. From sale of investments, we get 2 lakh. There is nothing else. So we have raised 2,25,000, but we need 3,30,000. Therefore, a balance of rupees 1,05,000 has to be raised from issue of equity shares. Issue of equity shares. Now, what is the issue price here? Sufficient number of equity shares of 100 each at a premium of 5%. Therefore, rupees 1,05,000 divided by 105 will give us 1,000 equity shares. Mind you, I have not taken face value and issue price here because I am not talking about the capital structure. I am talking about the funds required. Funds required, not the capital structure. Therefore, we need to issue only 1,000 equity shares. If we issue 1,000 equity shares of 100 each at a premium of 5%, we would get 1,05,000. 1,05,000 plus 25,000 cash which is available plus 2 lakh investments would give us 3,30,000, with which the preference shares can be redeemed. Of course, we need to ensure that we have enough free reserves. If we issue 1,000 equity shares, the capital structure, the proceeds of fresh issue is actually 1 lakh. And we have free reserves of 1,50,000 and 2,50,000 here. So there is enough to cover the 3 lakh face value of preference shares to be redeemed. Proceeds of fresh issue 2 lakh, and if proceeds of fresh issue 1 lakh, and if capital redemption reserve 2 lakh, if free reserves are transferred to capital redemption reserve 2 lakh, it covers 3 lakh preference share capital to be redeemed. Preference share capital to be redeemed. I repeat, in this instance, we needed to find out the required cash resources. We were not talking about the capital structure. which is why the balance 1,05,000 cash resources which is required is divided by 105, the issue price of the share, to find out the number of equity shares we require to issue so as to raise 1,05,000. Let us try and pass journal entries for this problem. Basically, we had face value of preference shares of 3 lakh and premium on redemption was 30,000. We were going to issue 1,000 equity shares. Face value would be 1 lakh and premium on issue would be 5 lakh. Sale of investments, we would get 2 lakh and the book value was 2,25,000. We have general reserve and profit and loss account of 2,50,000. What would be the journal entries? What is the entry for fresh issue? Bank account debit, we are getting 1,05,000. 2. Equity share capital, that's 1 lakh. 2. Securities premium, 5,000. This is one entry, fresh issue. Now we need cash. For sale of investments, what is the entry for sale of investments? Bank account debit. Money comes in is only 2 lakh. However, the book value is 2,25,000. Therefore, profit and loss account debit. This is the loss on sale of investments of 25,000 to investments. The value of the investments, book value of the investments sold is 2,25,000. So out of the books 2,25,000, cash comes in only 2 lakh. The difference is loss on sale of investments taken to profit and loss account. So now we've got 2,25,000, we've got 2 lakh cash plus 1,05,000, 3,05,000, and the 25,000 cash balance will be used to redeem the preference shareholders. So what is the entry for that redemption? Redemption entry would be preference share capital account debit 3 lakh, premium on redemption of preference shares 30,000 to preference shareholders account debit to bank 3,30,000. I've just omitted one entry. Preference share capital debited 3 lakh, premium on redemption 30,000 to preference shareholders to bank 3,30,000. I've combined that and made it as to bank 3,30,000. So preference share capital has been redeemed, fresh issue has been done, we have sold investments and raised cash. Now some balance needed to be transferred to the capital redemption reserve. How much is that? Face value of preference shares to be redeemed is 3 lakh. Proceeds of fresh issue, how many shares we are talking about? We are talking about 1,000 shares. Proceeds of fresh issue is 1,000 into face value. 1,000 into 100, that is 1 lakh. So for proceeds of fresh issue, we consider 100 face value or issue price, whichever is lower. So we took 100. But when we were raising cash resources, that had nothing to do with the capital structure. We just wanted to know how many shares needed to be issued to get adequate amount of cash, adequate amount of money, adequate amount of funds. For that, we took the actual issue price. So here, face value of preference shares to be redeemed is 3 lakh. Proceeds of fresh issue is 1 lakh. Therefore, 2 lakh needs to be transferred to the capital redemption reserve account. Before we transfer to the capital redemption reserve account, let us also set off the premium on redemption of preference shares. Do we have securities premium? No, we did not have any securities premium in the balance sheet, but 5,000 securities premium we got from fresh issue. We will use that and we will say securities premium account debit 5,000, but we need total of 30,000 premium. So the balance we take from the profit and loss account 25,000 to premium on redemption. that is 30,000. Next, the amount to be transferred to capital redemption reserve account, 2 lakh. Let us see, do we have 2 lakh? Let us take general reserve 1,50,000, profit and loss account 50,000, to capital redemption reserve account 2 lakhs. But please ensure profit and loss account has a balance of, it had 2,25,000, but 25,000 went as loss on sale of investments and another 25,000 went for setting off the premium on redemption. There is a balance of exactly 2 lakhs which could have been used. We've used general reserve 1,50,000 and the balance from the profit and loss account of 50,000. This would be the scheme of entries. So there are two aspects. One is the availability of funds, the amount of cash required to redeem preference shares, and the other is of course to not to upset the capital structure. Preference share capital being redeemed must be replaced by new capital or by capital redemption reserve account. On the other side, we might need also to check availability of funds. How are funds raised? It may be by the issue of new shares, it may be by the issue of debentures, it may be by the sale of investments or sale of any other asset. Another example. XYZ Limited had 20,000 12% preference shares of 10 each redeemable after 4 years at par. The company issued 10,000 14% debentures of 10 each at a premium of 10%. At the time of redemption of 12% preference shares, what is the amount to be transferred to the capital redemption reserve account? So what does this say again? Face value of preference shares to be redeemed is 2 lakh. The company issued 10,000 14% debentures at a premium of 10%. Less what is proceeds of fresh issue? There are no proceeds of fresh issue. There is a fresh issue, but the fresh issue is of debentures, not of shares. Fresh issue of shares only, fresh issue of capital only is to be considered for redemption of preference shares. So preference shares can be redeemed either out of the proceeds of a fresh issue of capital. It may be equity shares, it may be preference shares, but not debentures. So face value of preference shares to be redeemed is 2 lakh. There is no proceeds of fresh issue. Therefore, the amount to be transferred to capital redemption reserve would be the entire amount of 2 lakhs. The entire amount of 2 lakhs. Another example, A Limited had 3,000 12% redeemable preference shares of 100 each fully paid up. The company issued 25,000 equity shares of 10 each at par and 1,000 14% debentures of 100 each. All the amounts were received in full. The payment was made in full. The amount to be transferred to capital redemption reserve. So what is the preference share capital to be redeemed? It is 3,000 into 100. So face value of preference shares to be redeemed is how much? It is 3 lakh. What is proceeds of fresh issue? Proceeds of fresh issue of what? Fresh issue of shares, whether equity or preference. Issued 25,000 shares of 10 each. Therefore, that is 2,50,000. Was there any other issue? Yes, there was. Of 1,000 debentures of 100 each, but this is debentures, that is not proceeds of fresh issue of capital. So don't consider that. Proceeds of fresh issue is 2,50,000. Therefore, 50,000 should be transferred to the capital redemption reserve account. Correct answer should be option D, 50,000.